Hi, my name is Aina Sakina and my entry number is 261762. I'm going to present about Axiata Group Berhad. This is a telecommunication company formerly known as TM International and founded in 1992. Axiata is based in Malaysia. They have a broad operation to Nepal, Indonesia, Sri Lanka and some more. With the motto of advancing Asia, they provide the most largest mobile network operation, digital internet, broadband and smart services. In 2019, Axiata reported that they have roughly around 150 million members throughout Asia and generated around 25.3 billion ringgit Malaysia in revenue in 2018. The communication and multimedia industry market capitalization recorded around 4.8%, increasing around 4.6%. As you can see, the peers company for the Axiata is Maxis and DG. Maxis contribute around 2.43% to Bursa Malaysia, while Axiata contribute around 2.22%. The total asset is increasing over the year, while the total liability dropped. This was a good sign that the company managed their financial efficiently as they can reduce the debt and obligation from the outside of the company. The profitability ratio. All the return on asset, return on equity, and the net profit margin from 2018 to 2020 is showing a downturn trend. This indicates that Axiata's financial performance is affecting their profit attribute to the shareholder. This unsteady profit will also affect the return on equity. Liquidity ratio. All the Axiata liquidity ratio show a downward and upward trend. The highest ratio is in 2020. This shows that the Axiata is trying to take back their performance and improve the company capability to pay their short-term liability. Leverage ratio. Axiata is having a good performance managing their debt as a leverage ratio illustrates the ability of the firm to generate profit. This shown by the uprising trend of the leverage ratio. Estimated sales growth for the 2021 and 2022 is 0.7%. And the future profit also predicted around 3.7%. While the predicted EPS in the 2021 is around 1.18% and 1.2% in the 2022. The dividend for both years is predicted around 0.28. And lastly, the future share price in 2021 is around 30 ringgit and 10 cent, while the 2022 is 30 ringgit 32 cent. This is the technical chart for Axiata. The support level during the trading period is 3.82 ringgit, while 3.96 on the resistance. The moving average showing a bullish crossover on 9 April in Axiata stock price, as it is a good time to sell stock as the price is high.
Will explain about gas Malaysia Berhad or gas M that in utilities industry. So the background of this company established on 16 May 1992 to sell, market and distribute natural gas as well as to develop, operate and maintain the natural gas distribution system within Peninsula Malaysia. Develop a total of 2,100 km of gas pipeline across Peninsula Malaysia, supplying natural gas to 965 industrial customers, 2,159 commercial customers and 25,508 residential customers. And the growth cycle of the industry, this transition towards the liberalization of market set to take place in 2020 through the introduction of third-party access. And the competitive position is like the others company like Tenaga Nasional Berhad Tenaga, Petronas Gas, Petgas, YTL and Malacos Corporation. And on 11 June 2012, the Gas Malaysia was successfully listed on the main board of Bursa Malaysia Securities Berhad. Is the fundamental analysis for gas Malaysia, and as we can see from this slide is profitability ratio and liquidity ratio for gas Malaysia. And as comparison, the color of yellow is 2018, pink 2019, and 2020. So now is the leverage ratio and common stock ratio or price earning ratio for Gas Malaysia. And as you can see, leverage ratio is comparison to debt to equity, and common stock ratio is for earning per share for Gas Malaysia Berhad. Equity evaluation for 3 years of Gas Malaysia Berhad, as you can see from 2018, 2019, and 2020. And the average price earning ratio is 18.18 for Gas Malaysia Berhad. And this is the intrinsic value for Gas Malaysia Berhad. Now is the forecast future sales and profit for Gas Malaysia Berhad for years 2021, 2022, and last year is 2023. As you can see from this slide is the last is estimated stock price. As you can see, it's 2.75, 2.81, and 2.8 for the last year. So estimate revenue based on revenue growth in 2020. So this is the forecast future. This is the technical analysis for Gas Malaysia Berhad from 1 April until 31 May 2020. For the up above is moving average, MACD and RSI for the technical analysis.
Assalamualaikum and salam sejahtera. My name is Nurul Maizatul Faizah binti Mahmud and my metric number is 271030. I will now explain about analysis of the Heng Yuan Refining Company Berhad. First, we will start with the overview of the company. Heng Yuan is a petroleum product refining and manufacturing company. This company was previously known as a share refining company. Heng Yuan was listed on Kuala Lumpur Stock Exchange main market in 1962, which also known as a main market of the Bursa Securities Malaysia Bursa Securities. Malaysian Heng Yuan International Limited is Heng Yuan Refining Company stakeholders, the biggest one, having 51.02% equity position. Now we move to the fundamental analysis. For this section, we measure three types of ratio. In this slide, the top one is the liquidity ratio and the below one represent profitability ratio. For liquidity ratio, it is divided into two ratios, which is current and quick ratio. From the figure above, Heng Yuan Company are able to meet its obligation for all 3 years. 2018 have the highest current ratio and quick ratio. Second is the profitability ratio. It is divided into net profit margin, return on assets, and return on equity. From the graph, it shows that in 2019, Heng Yuan Company has the highest net profit margin compared to the other years, which is 3.49%. In return on asset ratio, 2018 has the highest ratio at 7.4%, but the return on asset for 3 years for Heng Yuan Company are declining. On the other hand, year 2019 has the highest return on equity ratio at 1.74%. This shows the company are able to generate more profit with less capital. The last ratio we measure in fundamental analysis is leverage ratio. This ratio is used to measure company's ability to meet its financial obligation. This ratio have two types, which is debt to equity and debt ratio. Year 2019 has the highest debt to equity ratio at 1.06%. This tells us that in this year, Heng Yuan Company have high creditor financing, while for the debt ratio, 2019 also are the highest compared to 2018 and 2019 at 0.644%. This is considered highly leveraged. This is equity valuation for 3 years, 2018, 2019, and 2020. The average sales growth is 11.03%, average net profit margin is 3.13%, and the average for payout ratio is 12.86%. This is a forecasting for 3 years of Heng Yuan Company. The future share price are increasing compared to current price, which is 5.99 Malaysia Ringgit. In my opinion, investors should invest in this company now to gain profit in the future. The technical analysis consists 3 categories, which are moving average, MACD, or moving average convergence and divergence, and relative strength index. In moving analysis, we only take moving average of 20 years, which shows us blue line. From the graph above, the highest point has reached at 5.6 ringgit, but then it started to decline.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Syahrul bin Mamat. My metric number is 261247. Now my part, the company I choose is Malaysia Airport Holding Berhad, MAHB. Okay, for the background, first overview, Malaysia Airport Berhad is to focus on the operation, management and maintenance of airports and growth cycle of industry. In 2020, MAHB recorded a net loss of 1.11 billion for the financial year ended December 31, 2020, compared to a net profit of 537.04 million in the previous year. The decline was due to the global impact of the COVID-19 pandemic as well as the implementation of continued movement restriction in Malaysia and abroad. For the competitors of position, first is TAV Airport Holding Corporation, Malaysia Marine, and Aéroport de Paris S.A. Is the fundamental. First, the profitability ratio. Profitability ratio has 3 points. First, net profit margin. The highest net profit margin is in 2018, which is 0.1439, and the lowest in 2020, which is negative 0.5373. Next is return on asset. The highest return on asset in 2018, which is 0.0314, and the lowest in 2020, which is in negative 4.94. Finally, return on equity. The highest return on equity is in 2019, which is 0.1209, and the lowest here is 2020, which is negative 0.1238. Is liquidity ratio. First, the current ratio. The highest current ratio is in 2018, which is 1.9989, and the lowest in 2019, which is 1.3380. And next is squeeze ratio. The highest squeeze ratio is in 2018, which is 1.9389, and the lowest in 2019, which is 1.2864. And lastly is the cash ratio. The highest cash ratio is in 2018, which is 0.6801, and the lowest in 2019, which is 0.4418. For the forecast, intrinsic value from 2021 and 2022, as we can see, will be decreased. Is technical analysis. The first is moving average. The graph shows the moving average is fluctuates. The moving average pattern of Malaysia Airport is this line, as the line decreased from 1 April to 12 May, 20 May, and return further up from 20 May to 1 June. Okay, next is MACD. M is when the blue line is lower than the orange line from 1 April to 12 April, which is mean the stock price can be predicted to this line. So buying this stock is not a good signal for investor. Lastly is about RSI. In early April, the RSI was also at 15%. In mid-April, the RSI began to plummet downwards until the oversold level RSI, and rose again at the end of May until the beginning of June, which is the RSI at normal level.
Hi, my name is Muhammad Nur Hisham bin Mustafa. My metric number is 263450. Today I will explain about Nestle Malaysia Berhad, which is consumer non-cycle industry. Next is background company. Overview of company. Nestle Malaysia Berhad is Malaysian investment holding company that manufacture, market and sell food product both domestic and international. Company main product are instant food, meat product, food additive and confectionery items. Growth cycle of industry. In Nestle overall business strategy was to enter new region ahead of competitors and establish a significant presence by selling basic food product. Nestle growth strategy in emerging region is based on customization rather than globalization. Competitive position. Malaysia is known for having a significant and growing food retail business that sell both domestic and international goods. Dash Lady Milk Industry, Fraser Nif Holding, FNM are some example of consumer product company, which is the competitors for the Nestle. The component in profitability ratio that we calculate are net profit margin, return on asset, and return on equity. Uh, it showed downward trend from 2018 until 2020. Its mean profitability of this company is worsened. Net is liquidity ratio. The component liquidity ratio that we calculate are current ratio, quick ratio, and cash ratio. The three component that we calculate show downward trend from 2018 until 2020. Calculation above show the intrinsic value for Nestle Malaysia Berhad. The intrinsic value for 2021 forecast calculate is 155.38 cent, while in 2022 forecast the intrinsic value is slightly increased to 161.13. This indicate Nestle Malaysia Berhad value of stock is overvalued because the current price is lower than estimate value. The first indicator is MACD. Based on the figure, there is a bullish signal crossover at the beginning of April 2021, turning the MACD positive. This indicates a buy signal to the investor. On 7 May, we have bought 100 share unit with the value of 135.10 per share. Based on the graph above, the blue line almost touched the red line, which means it almost indicate the bearish signal, which is a good sign to sell the stock. We sell the stock with price of 136 per share and gain profit at 0.74%. For the RSI indicator, we can see that during our trading time,
Assalamualaikum warahmatullahi wabarakatuh. My name is Fazila binti Mamalik. My metric number is 271019. I'm going to present Top Glove Company. Top Glove Company is a glove manufacturer industry based on rubber. It is also specialized in other products like condoms, dental dams, and face masks. The founder of this company is Lim Wei Chai on 1991, which is also the chairman of Top Glove. Top Glove is one of the largest latex baseball mitt, cyanide, surgical, family cleanroom on the market. Top Glove achieved 31 billion net profit on 2012. The company is planning to invest in R&D, IT, and automation in order to improve quality and production efficiency. For analysis of the company, industry cycle, Malaysia also the largest consumer of natural rubber and leading on producing rubber glove. Rubber glove exports are expected to reach 7.3 billion USD in 2020. Competition positive faced by Top Glove in rubber glove industry is the company that produce the same product as their company. For example, like Kosen Rubber Industry Berhad, Supermac Corporation Berhad, and Harta Liga Holdings Berhad. Okay, next for fundamental analysis. Firstly, for liquidity ratio, for current ratio, this company shows an increase from 1.116 in 2018 to 21011 to 2020. As for quick ratio remain unchanged for 2018 to 2020, which is 0.941. For profitability ratio, net profit margin, return on equity, and return on asset stated increase from 2020. For leverage ratio, this company shows good performance in these 3 years. All ratios stated decrease. Forecasting sales and profit both will increase from 2018 to 2020 from 238.2 million to 241.2 million,
for sales and from 3.8 billion to 3.9 billion for profit. Forecasting earnings per share will increase from 1.42 million in 2008 to 1.44 million in 2020. So forecasting share price is expected to increase in 2020 with the price of 14.75 million, same from the previous year. And lastly, for technical analysis, it consists three indicators, which is MACD, moving average, and relative strength index. From the graph above, we can see the decline of the price.
To conclude this presentation, all of the company in the portfolio able to gain profit, but top glove company have the highest profit, and we can say that this company is outperformed from the other company.